right, if someone can confirm that they can hear me, that would be appreciated. There's the bell. If you can hear that, let me know. I'm going to assume that everything's working, unless I hear from somebody. That would make me feel a little bit better. But yeah, so we're just looking at, what day is it? Wednesday, June 15th, Fed Day, with a 75 basis point increase. So I wanted to take a look. I'm going to give just a couple minutes for a couple more people to come in if they want to, just so I don't have to repeat myself. But what we're going to go over, for those who are here nice and early, because I did say it was going to start in 10 to 12 minutes, so I'm going to give people at least 2 minutes to make their way over here. But what we're going to look at is we're going to look at the picture before the open. And I want to show you when I start the day, which is actually overnight, technically. So when I'm trading is usually around here on the edge of the chart. I want to show you what I'm looking for, and then we're gonna jump into the algo. And actually, let me get this. Let me get this all figured out now, so I don't have to do it later. While I wait for everyone to come in, so I'm just gonna rewind this and make sure I don't have. I think I erased all of my markings besides the voodoo ranges, which were there before. I may have taken away some important levels that were there previously, so this may not be exactly what I saw, but if anything, it's less than what I saw. And so we're gonna try to see. I'm not gonna go through every bar. There's just so much action on these volatile days that it would take forever, even on like a 30 or 40 tick. It is interesting to look to see if the setups are working all day, but it might be interesting for me. But I think anybody who doesn't have access to the software is going to be like, that's great that you've got something that's working, but I don't have that. So so we're gonna instead, what I want to show you, everybody, is once we identify here what areas we're looking at and why, like what we think might be a good opportunity there. We never want to assume that we know what's going to happen, right? We don't go into a situation thinking this is clearly bearish, so I'm just going to keep shorting until I'm right. Like that's not the best way to approach, especially day trading with leverage, right? Because I'm trading futures. So usually what I'm doing is I'm getting a picture of I'm zooming out. I'm getting a big picture, and instead of saying is this bearish or bullish, what I wanted, that's important to know. But what's more important is where do I want to participate, and where do I want to avoid participating, and that's avoiding participating is probably more important. So I've got these levels up on my TradingView candlestick chart, and I just want to quickly go over what they are because we're not going to keep them all, but I just kind of wanted to demonstrate how this works, because I do look at these, but we're going to hide some of them because it's a little bit kind of a lot to look at all at once. And when I'm trading, I don't necessarily leave them all on. I will replace them with lines on this chart where I'm actually doing my trading, and then come back to this chart blank, or with some things removed, so that I can, which I can do like this. So we can like hide just the drawings, which is what we're going to do in a minute, or we can just hide the indicators, or we can hide both, right? And just see the candles. Whoops, I did that the opposite way I wanted to. You get the drift. So you can cycle through what you want to see, because a lot of times if you have this many lines on your chart all the time, you're just going to miss really obvious price action based information. So the reason the lines are on the chart is to, along with the volume, which does take up a lot of space, but it's to orient me in the morning or whenever I'm like restarting, not necessarily morning, but if you've been away from the price action, you're returning to see what's happened. Having the voodoo range levels, I like having the bull bear delta, and I use a 24, or even like this is a 3-day volume profile, which is what I've gotten used to. But I also look at previous session volume profile, 10-minute volume profile, 24-hour, and RTH volume profiles on Sierra chart. So I'm using a lot of information. But with the 3-day on the candlestick in particular, on the candlestick chart, all those other setups are great for the Renko bars. If I'm just trying to figure out, like, okay, this is where I want to attack, right? I don't need quite so much. But if I'm just looking at the candlestick chart and I'm trying to figure out where do I want to get involved, knowing where the previous days or the previous sessions have been participating more readily, where it's fair versus where it's unfair pricing, right? That's what I'm really looking for, is to identify areas where there have not been a lot of opportunities to take trades at that price level or that zone. And whenever we do get into that zone, we get some sort of a response. The reason why we want this is because generally how we think about trading is when we're day trading in particular, we have forces that are much stronger than us. As day traders, we are the weak hands, the weakest. We're on too much leverage. We can't be holding positions for weeks or days or hours. Most of my positions are, I'm out. I hit my first target within seconds, right? If I'm lucky, maybe I hold it for 15 minutes, 30 minutes, but that's unusual. Usually it's just like filled, target hit, runner, right? Leave the runner however long it goes, next trade. So I'm the weakest hand there is, right? My stops on NQ are rarely 20 points. So, and then I'm taking my first profit usually at 10 to 20. So it's, and like a 30-point move is like great. Like that's a good morning for me if I can get like maybe one or two of those, right? And then a couple 10-point or 12-point moves, and that adds up too. So there are other traders in the market with a lot more energy, a lot more power than us, than retail leverage futures traders. And with the ones with a lot of power are the ones that have positions that were established far away, or enough resolve, I guess you could say, where they have decided on a higher time frame that, for instance, anything above 11,537 is, let's say, overpriced, right, from their point of view. So anytime we get price approaching that, they're gonna start putting passive sell orders on the ask, and are fine getting filled there literally for days, right? So let's imagine what that institutional trader does, right? So he sees this action, and he's like, wow, it's really bearish. I think it's going to be bearish for quite some time. He's probably hedged, right? But he's thinking, I'm gonna participate in the futures to try to take advantage of this. And so, like, obviously not all of this volume is his, right? But look at the buy volume. Sorry, I pushed that too far. So look here at the blue or teal is buy delta. So more trades are being done on the ask, market buying, whereas the red is market selling. So if the guy I'm talking about, like I said, he saw this, he thought, okay, this is my new line in the sand. I want to be involved anytime. I want to be getting short anytime we approach this range, this level, or we trade in this area. I want to be selling my longs and getting short, right? Who knows who it is? It doesn't really matter. It's obviously a lot of participants. So if you look at this delta, in this zone, they made some moves here. See that? But this delta is actually for the following information, right? This delta is this information. So what I want you to see is that that institutional trader might have established their position here. And again, this is just my guess, right? That they established a position here, and that's why we get this up, down, up, down. Every time it tries to get above their zone, their sell zone, they are adding to the ask. If it ever gets a whole voodoo range above it, like 11,605.75, it can't even cross it physically. Why? Because this institutional trader knows that that level is important and that the algos have been trading it consistently. So he's not sitting at that level, right? He's short down here. And anytime it goes a little higher, he's adding to his short, adding to his short, adding to his short. And whether or not he's using the same system I am or something similar, he knows, along with many other people, that if the market trades back into this area here, let me just change this color because I used purple for something else. So if they trade into that area there, that's very, very, very rich, and they want to be selling that. So as soon as they approach it, they're going to hit it, right? So what I want you to see is that they did that over and over again anytime price came up there, right? Price came up to 11,537, they attacked it, right? And then if you look what happened, they got a response from these constant barrages of attacks, right? Sell, 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 sell. Finally, they get a response. And so if we had already been watching this, let's just take out the drawings real quick. If we're already watching this, and we don't necessarily know that that guy's sitting there because we haven't really this one, that this guy's sitting here, we might not even think about the fact that that's a sell because it looks kind of balanced for a second. And some people might be like, oh, look, we're breaking out. It's going to reverse, right? And that's what a lot of retail traders do. But what we need to do is we need to keep in mind, like, look, this guy already made his decision and now he's already executing his sell orders. He's going to defend this, right? Look at, they tried to get over it over and over and over and over again, and it came all the way back. He's going to defend it once, like a lot of the time, because he's got this resistance above him protecting him at a Voodoo range level above it. So we can do the same thing. We can follow him into that trade, or even if we didn't do that, right? And like I said, if we pulled it up today, the 15th, and let's say we missed the last 2 days or whatever, and we just looked at this, we could say, well, hey, this seller is clearly getting more and more active. He's not backing down, right? So that's you can't just be bearish still. And that's where this gets tricky. You can say, well, look, there's an active seller in the market, right? I'm saying it's one guy. It's obviously not, right? I'm trying to conceptually talk about this, and it's easier if you just think about it as some huge seller. We know he defended his position, and so I'm bearish, right? No, I wish it was that easy. If you are here, you are bearish when you see that. And this is the trick. Time is a huge factor in the market. You want to kind of get rid of it when you're day trading and thinking about time in general, but like when you look at what happened as time flowed, you need to pay attention. I'm gonna have to turn these drawings back on. You're gonna have to pay attention now to a new level, and that's the area that the guy that sold this thinks that this price is too high. So he thinks fair value is lower, right? And he got a response from that first, let's say, day of selling. He got a nice response, right? Came all the way down to 11,303, let's say, down here at the volume area low. He got a little bit further than that. They put in some excess. It bounced back. So he got the response he expected, you'd think, right? If that was me, I'd be very happy. This is an institutional trader who's trading all day long at this level. He's not satisfied. How do I know he's not satisfied? Because he came back for more. Right? So yes, it is bearish there. But when this happens, when we get a big sell volume, this happened to be the beginning of the market open on Monday. We crushed it, right? They got it below this low. If this seller is right, and the market price is way too high here, he already cleared out a bunch of buy orders here, right? Or he got the market to do it for him, basically. He was active up here. Everybody else followed him down. It came back up. He's like, hell, that worked last time. I'm going to try it again. It comes back down, and it finds excess where? Like, right at the Voodoo range level, right? Like, it didn't even go that far compared to the last one. What does that tell us? It tells us there's a chance that we're stuck in this zone, right? How do you get unstuck from a zone? There's two ways. You trap traders or you get new market information. I primarily wanted these 50% lines just so you can see that sometimes we line up there for trades, but I'm going to take them off right now because it's distracting with so many things. So let me just take that off so we can really look at this. So I can always put them back. I know how to draw them. So if this is the low, this line here, let's make it solid and let's make it red. So if that's the low from, let's see, is this, sorry, this is Tuesday, Monday. So Monday's low, right? He comes back at it Tuesday. The market comes back at that level, trades below it twice, once, twice, and puts in excess. Look at this volume, way higher than average, right? I realize that this volume is more, but that's not bearish. It is. Okay, big volume is bearish if you're at the sell momentum point, right? Where momentum is building. When all of our volume, all of our sell volume, look where it is. It's at the lows, right? Look at the bear bull dominance, this delta again, now that you kind of see this picture. And remember, this delta is only from this point on. It includes FOMC. But we did not come back down here again. And take a look what we had going on down here. We had buyers with a huge anomaly in the delta, right? Some big buyer got involved here. Big buyer. Well, what that could have been was somebody saw this, and just like our smart investor, institutional investor who said, hey, look, this is really bearish, I'm going to short this here and reshort here. Someone did the exact same thing on the other end. They said, hey, this could be a support. Let's watch it. Oh, wow. That support held. That's interesting. When it came back and it gave them an opportunity to get long there, they're like, you know what? Look how close we are to this natural rotation point. I can put, as long as we don't close the day down here, we're going to get a retracement. Where? Probably to 37, where this guy's been sitting, right? That's a pretty good trade for a swing trader, and might be an okay trade to start with with the institutional investor too, if they think it might go higher. How high will it go? Well, probably to the next point where you have bearish delta, right? This area here, right, that I marked off before. If you look, this support resistance zone aligns nicely with what ended up being bearish, right? So I guess you would not have known this was bearish quite yet. This is from futures situation. So at first, when you were getting in here, your first challenge would be, we need to get through this zone here, right? All of this selling needs to be broken. So you'd put an 11.468.25 alert and say, if we get up here, we need to watch very closely and decide what to do. And like I said, here's where the market wants to trade, where it thinks fair value is, where all the volume was, right? That's the magnet of the market. But it can only do that if it can slow down this momentum. So when that happens, which happened yesterday, that peak below the previous low, bounce, flush below the previous low on high volume, and come back with even more volume. You guys, this candle is so important. This. Can't tell you how important this is. Only a few people on Twitter even pointed this out. Some of us in the Trade and Perform room were talking about it. Chica talked about it in his Twitter. A couple folks knew that this was important to watch. Okay, so if they did, pay attention, or just learn how to find it yourself, because it's all there, right? Low, test below, flush below on high volume, and then higher volume to follow, right? So what we can now think about, we can take out this low because it's actually no longer that important. What we want to think about now is this area here. So this yellow line right here, that's blue over here, that is the point of control of the area that's being evaluated for the volume profile. So in this case, it's the 3-day volume point of control. So that level was established here when we did all this bouncing around, right? But what's interesting about it is that it's so close to the low. In a bear market, when you get POCs very close to the low, what you generally want to see is continuation. Makes sense, right? You've got big momentum, everyone's selling. they got most of the selling to happen near the lows. Well, so everyone's trapped, right? Everyone bought up here, or everyone who'd bought up here is now facing this big volume selling. Shouldn't they let go? Well, you'd think, but when they don't, and instead you get a flush below and a response at high volume back to that volume point of control, if you were short here, you need to be on guard because that momentum is clearly getting challenged. So it's not obviously bullish yet, but you don't want to be adding to shorts here, in my opinion, once you've seen this, just be in the same way as you wouldn't want to be adding to shorts, or I'm sorry, longs here, here, or here. We had a sign that there was a seller there that meant business. He kept coming back for more. So when we trade overnight before today, which was like here, we traded overnight above the volume point of control. It was, like I said, developed primarily here. It might have been a little higher then, but because this isn't current. This level here, blue and yellow is current, and purple, 11,357 is the 3-day point of control. But at that point, it might have been a little bit higher. But one way or another, we're trading like at it or above it. We're not pushing lower, right? The momentum is not increasing. But what most traders will tell themselves is, well, there's low volume here, so I can't trust it. Okay? So what you're doing, if that's what you're thinking, is you're overgeneralizing a concept that is true. It is true that when you are driving with momentum, if volume is decreasing as that momentum, as price continues in direction of momentum, if volume is decreasing at that point, you should be suspicious, right? So think about that. If the important part of that is when momentum is increasing, when price is continuing to fall. Is price down here? No, price is back up here. So when price is going back and forth and ranging, balancing, right? Low volume is normal. It's really normal in Asia. Really normal. So when we get any increase in volume during chop, so see how this is the average volume, this cloud here, this area, and it falls down here. Like already when the average volume is decreasing and my actual volume bars are increasing, you must pay attention to this. See this little like jump. I know people say, dude, that's like that's not even London Open. Like you can't trust Asia price action. What they mean by that is that this support is probably going to get broken. Yes, true, right? Once you get real volume, this support will no longer mean anything because the ones who actually bought it were on low volume. Yes. So you don't want to be buying here with a stop loss here. Sorry, I can't point to it here, right? No, you don't want to be doing that unless you're scalping, then that's fine. But what I do notice here is that we're at the point of control of the last 3 days. We've got increased volume by buyers. They're no longer buying down here. They're putting in buy orders at a new higher low. Now, we have to realize it's low volume, so that higher low is not going to hold, right? But that's still really helpful information because everybody knows these rules, you guys. Everyone knows, generally, not everyone, but the institutional investors know what we all know about volume and about volume profile and about volume delta and all that. It's all like entry-level, elementary information. And they've already built the algos to read it and execute off of it. So just assume that that's priced in, right? So when you get something that doesn't really fit with your picture, you have to pay attention. It does not mean that the place to buy is here, but it means, hey, I had sellers here before, clearly, and all of a sudden they are buyers. What happened the last time we saw buyers here? That's the obvious place, because the markets are basically run by algos. So if you can find something similar, well, what do you know? This was late Asia, Monday night. We made a higher low. And what did we do? We broke out, pulled back, couldn't break it, and ripped. Where did we rip to? 11,537. Huh. Okay. So we pull back, we get into this volume point of control, we break out, we pull back, we can't break the point of control. Guess where I'm targeting? Yeah. So I hopefully everyone sees that, right? From a big picture view, this volume is not enough to be meaningful. This low is not going to hold on a big volume pullback. It shouldn't be expected to. It would be weird if it did. So yes, you can't trust that support on low volume, but when you see a volume build, no matter what session it is, at a level that's important, like a volume point of control, that was at the bottom of a bearish momentum, right? The point of control is at the bottom of this, like, if you think about this whole leg down, right? So much, look at where the volume is, right? It's this day and this day. Where is that? It's here. So you're getting the volume at the low of that, and it's acting as support. And you're going to tell me because it happened over Asia that you're not going to take that trade? Come on. Like, we know conceptually that this works, but we get caught up in these, like, overgeneralizations of, like, Asia can't be trusted, you know, low volume is not good enough to take a trade. Like, all of these concepts have a place, but we have to apply them in the right spot. So right away, when I came in today and I saw this, it was a little earlier than this, and I saw this bounce, I thought, okay, 11,537 is a place that I should be targeting. And what do I expect to happen at 11,357? 11,537, sorry. Well, this institutional investor has been consistently selling there. Consistently. Right? Do I want to act like a institutional investor and leave my sell orders open here just because there's a voodoo range level and there's sellers above it? No, I can't trade like that. I'm trading with leverage. I can't just leave open orders and hope they don't hit my stop, right? That doesn't make any sense. But I am going to watch it, as well as this area up here, if we can get there. Because there's information that's useful to me. First of all, that there's very little volume up there compared to down here. And every time we get up there lately, we seem to find a seller. So if we find a seller there, it will give me a good opportunity to sell back to where the point of control, right? That's where we should expect all that magnet. Now it's interesting because this area eventually, like the volume does eventually establish higher, right? That's why point of control is currently up here. Or this is not point of control, but this big volume build. Point of control is still down here, but this big, if you see this gray here, that big volume build happened today. That's not from this. That happened today. So, I guess I should have done this earlier in the day and it would have been a little bit more clear. But just understand that at this point we should have been comfortable with the idea, not known. We should have been comfortable with the idea that the price will, since it bounced here at point of control and it tried to get there and was unable to, even though it happened during Asia or early London, that the natural rotation is going to be first to stop here at 11,468. Make sure there's buyers there. I expect there will be because of this little bounce. If there's not, we're going to take this out. If there is, it's going to go to 11,537. At 11,537, I expect someone to attack it. And then if I see some aggression and a setup, I can take it. Where do I expect to target? Back here to 11,357. The point of control the last 3 days. And where we're seeing all this activity, right? If we can get underneath 11,262, which is the voodoo range level that's basically being activated here when we test into it, test over it, this is what the sell algos have their eye on right now. Well, not right now, but if this was right now, that's where they're watching. They want to know, can sellers push through that important level Or do buyers still control it? Because again, we had a test of it here. Buyers responded. We have a test of it. We had an attempted test of it here, I should say. I'm talking about this zone between these two voodoo range levels, which, like I said, is a voodoo range, right? Between two voodoo range levels, voodoo range. So we have a test into it, response. Test into it, response. Test beyond it, response. So this is our second mouse bullish entry for an expanding range. If anyone's watched my videos, they might recognize that setup. If you don't know what I'm talking about, you'll have to watch my video. I'm using the voodoo range to have excellent targets for trades. I believe it's called like trade targeting with the voodoo range or something like that. This is a established setup to go long. Once you see this candle, do this, okay? Just leave it at that for now so we can continue. Okay, volume build into England, into London. We expect price to come back to this level where we have an institutional investor filling sell orders, right? They filled it there. Okay, so we open the day with open drive higher. It was a little bit messy, but for Fed day, open drive higher is pretty rare, and we get right to 11,537 in the first 30 minutes. So right there, in my opinion, from my point of view, I should have been expecting some kind of a response. That should be my expectation. Whether or not we actually get a response is unknown, but my expectation should be, if I'm right and this institutional investor remains, we should see sellers attack this test. When will they attack the test? Usually 30 to 60 minutes within the open. It should be attacked. It does not mean that we should put our sell orders passively at 11,537. It means we need a setup, right? We need a setup to take it. So let's take the algo on the 24. And now it's a little tricky because this algo is 1 hour earlier than this chart. Okay, this chart is in Eastern time, New York time, and again that's 9:30 New York time, closing at 10. So we are looking at 9 o'clock Central on the algo because Simon is in Texas and that's on Central time. So we're going to see the open at 8:30. You can see we opened, drove higher after testing below. These little dashed lines are the voodoo range levels, by the way. Note right at the open, we get a nice test below it that closes above it on a trap trader bar, these green bars. Okay, I'm not going to point out every single setup, but I just want to show you kind of the and again, these are scalp setups, right? We're not, doesn't mean we expect all-time highs or something. It's like we should get 12 points and we might get 30. So look how they try to come back into the voodoo range level and fail, putting in what's called a power bar, these little purple sideways triangles, or a power bar. That becomes an important support to hold, and the triangle after it becomes a good entry. And so, like I said, I could literally go through these one at a time. The level that we were watching, again, was 11,537, this one. So when we get this first pullback, I'm actually expecting higher, even though that is like potentially bearish. I'm usually not selling that one, so I would miss this trade. It just didn't set up how I would want it to. Note we got back into the voodoo range and put in a bullish. This is a bullish combo. This bar followed by the triangle is a bullish combo, so that would be long with a stop underneath, or with a stop being a close underneath here. Okay, that fires off. We get more divergent bars, so now we can't close below this. We can trail our stop, and note that we touch below it, but we don't close below it. See that? Does not close below it. See that? Oops, didn't mean to do it. That's normal. and ooh, did it close one tick below it? It might have closed one tick below it, which is just, that happens sometimes, right? generally it's good enough to say as long as it doesn't close underneath this. The real rule is if you want to be, if you want to geek out about it, the real way to know for sure is when you get this yellow point of control line with see the dash right here, that's where it meets the bar. If you can get that yellow point of control line below the low of this on a bearish bar and there's no response from bulls, that's usually a sign that this is done. I might get stopped out on this, but I'm willing to come right back at it with my next signal here, because they did not successfully get the point of control line underneath this low. The problem is you can put a whole other bar in before you know. So you have to kind of weigh, you have to make a black and white line somewhere if you want to have a hard stop, and I do, because it's not safe to trade with that one. So you need a hard stop somewhere. So choosing where that hard stop goes is up to you. And for me, the kind of the balance in between a test below it and a point of control below it is a bar close below it. But keep in mind that bar close is just based on this last swing low and wherever we opened this 24 tick Renko bar. So it's not perfectly scientific to use a close, whereas the POC below is getting a lot closer to like what I would count. If I wanted to tell an algo when to switch to be bearish, it would be when you get a POC below it on a bearish bar. So anyway, we save it and it continues higher. And oh, by the way, it has to be, and you know what? The fact that this started with a divergent bar means that even if you did get it back in here, it's most likely going to chop, not reverse. So the chances for a reversal here are actually really low. And again, people don't, if you don't believe me, what I want you to do, and even if you do believe me, what I want you to do is go back and actually study it. Take notes. It's boring, but I found it fascinating. But when you, if you dig in and say, I wonder how often you get open drive higher with a divergent dot, or a bar that makes divergence, delta divergence, and then you reverse the whole thing, how often does that happen? And then go one step further and say, how often does that happen when we get a test below it, but we can't get an in-bar POC below it? Because I'll tell you, my own research says that most of the time this little test happens, we go higher. And as a result, I can take this arrow up, which is telling me momentum is going higher. So if I have a setup behind that, like a trap, I can take it for a scalp. Okay, this is technically a bearish setup. But again, it's not bearish, so you can take it, but it's probably not going to do anything. So you get one bar, and then it comes back with a bullish setup, triangle down, star up. Okay, we're still not at the Voodoo range level. There's really no reason to be bearish here. Okay, here we go. Now we're lined up, or just about 842. I guess we're not quite there. This is where I start to get a little bit nervous. We've traded above the POC. We put a POC above the Voodoo range, right? And we came back with a trap trader candle that has a star, and we closed below the POC, below the Voodoo range level, 11,537, even though we put a POC above it. See that little dash right there? That's where the in-bar POC meets this bar at close. So at the close, most of the volume is above the Voodoo range level, but we close below it. And it's got a star, which suggests that there's momentum and power in that bar. Someone is actively selling. So if I was long up to this point, I'd be getting out. It doesn't mean it's the top of the market, right? These setups are not oriented to where we are in the chart. The algo setups are oriented to where are we compared to the last few bars, or where is price compared to where it opened, right? Or where is price compared and other not just price, but where are other measures compared to where we were 10 minutes ago? Where were they compared to the open, right? It is looking at things like this, but it's not. It would be too much programming to have the algo also tell me this is the area that you identified on the chart that you wanted to watch for sellers. It's not going to do that. I assume that I do that. I do my homework. That's why we started there, is that's what I'm doing right away. Before I even look at the algo, which is just my trade execution program, before I even look at that, I'm looking at this and saying, okay, I want to be a buyer as long as we don't find sellers at 537. If 11,537 has sellers, I assume this guy is active. What happens when he's active? Well, we tend to get reversals. They come into it and they reverse off it, right? We said that already. It's got, yeah, let's just leave it at that. So, because we did plenty of that before. So when I see this, I'm no longer active. I'm no longer aggressively looking for buy orders unless I can buy and target this area. But even that is super aggressive. I can also take a, if you look here on my charts, I've added a few things, including the the volume profile for the last 10 minutes. See that gray area there? So that is telling me where all the volume is in this last rotation. And so what I see here is this purple line, which is the point of control for this last 10 minutes, and that is here, right? This close has not yet breached it. So I really don't want to be shorting quite yet. It's just too aggressive, in my opinion, to take the very first short that you see at your location if you haven't at least seen what happens when you come back and test where all the volume is in the last like X minutes, right? I'm using 10, but you can use whatever you want. I'm rarely going to trade for longer than 10 minutes, so 10 seemed like a good number. We also see one more thing I've added, if anyone is keeping up with all my videos. I know there are there's a lot of information in here. Whoops, I'm trying to delete these and I can't seem to do it. But the other thing I've added are these diamonds here. The diamonds are telling me when, see this red diamond and this white diamond. They're not necessarily trade entries, but they're telling me when I have a big volume candle trapped and that this trap, so basically if you look down here at the volume, it's telling me that this volume is significantly bigger than like it's been lately on this rotation down, right? So this rotation down started here, and we have big. Now this one's a little, like I said, it's not a trade entry, right? By itself, you have to analyze what this down rotation looked like to see if that even matters to you. But there are times where I want to know, for instance, here, I may want to know that this move up, right? If you look at the waves, you've got the big dominant wave here. So this was a setup. I just didn't see it. It was a complex setup. I'll show it what to you once, and you can review this as many times as you need to understand it. Okay, dominant and third wave is, I can use this. If you look at this 3-bar wave, this big wave, those two waves, the high was there. This one is bigger than both of those. We call it a third wave. Based on like Wyckoff concepts, you usually get a third wave. You don't always get a fourth, but you can. Okay, that's the first piece of information that we needed to be, if we were trading at this time, we'd want to be carefully analyzing before making a decision of whether or not it's time to fight the trend. So some people take this trade just because it's the third wave. I personally don't, unless it's just right. Now, if you look, the other thing that's important about this third wave is it's bigger than all of the sell waves. See that? The white or the gray waves back here. It's bigger than the last two sell waves, but you can see that, and it's even bigger than this last third wave. Actually, that might not be true. Let's see. Who's dominant? The dominant side has the bigger waves. These are cumulative volume waves. The dominant side is bullish, which is what I thought. So you've got more people buying than selling. Makes sense. Momentum's higher. And the biggest volume wave was here. Now, the interesting thing about this is that the high of the day at this point is here. Okay? So right when I see that third wave come off, you don't know for sure that it's done until the second one prints. So once I get this, here, let me take off all these lines. Once I get this bar here with the triangle down, I now know that this wave is done. It's not going to change. Does not reprint from here. Okay, we know it's the third wave because it's the biggest one. We know it dominates, it's bigger than the sell wave. We also know that it did not reach the high. So what I then do is I go to my Trap Trader PNF. This is the Trade and Perform PNF chart with the Trap Traders marked. And I want to know, were any buyers trapped at the highs? Why, yes, there was, right? The buyer trapped at the high, got trapped way back here. Okay, I wasn't watching that at the time. It could have been a good scalp on the retrace. Generally when they're trapped that high, what you get is the immediate rejection, and then they test above it, and then below it, and then above it, and then if they fall back or below it again, it's probably done, right? You want to be the second or even the third mouse. So if this is the first mouse here, right, which gets a good trade, this one doesn't reach it. If we can get above it again, like this is now the second mouse. So the first mouse got a piece of cheese. The second mouse might get a bigger cheese because if he got caught, there's cheese left over for this guy. and in this case, it was. There was cheese left over for this guy. No, sorry, this is just this is the same. That was just the high, right? So the Trap Trader's at the white line. We trade under it for the second time, and we get a nice response. So that was a trade. I just didn't see it because I wasn't looking at everything, and it's complex. You don't need those trades to be profitable, but they sure do help to know when they're there. Once I got this one, we are well above that Trap Trader. You see that? Oops, we are only here. You are well above that Trap Trader, and you've already tested above it, tested below it, tested above it, tested below it. In my experience, what tends to happen now is this white line where there used to be a trapped, did I say seller? I meant trapped buyer, if I said seller. The trapped buyer, right, when we went lower, we've now reclaimed that, tested below it, and gotten higher than the previous high. So while this may be a scalp short, the truth is that we should expect some kind of a response around this level. Will it be exactly on the line? It doesn't have to be. But I'm going to mark off, this is exactly what I would do as I was trading this. I would mark off either the low of that rotation where we got above it to the high of that bar that got above it, which is here. That's a very likely spot to see a response. If there is a 10-minute point of control line, which are purple, this, behind it, that was left untested, expect it to be tested. That's the rule. So we put a line here. And you can see that we did not test it. And the reason we didn't test it is because it was a pink star bar, which suggests that we had a little bit of a squeeze go on there. So, in my opinion, I can short the yellow star here because it's at location and it's setting up with a pink bar star. It's also got two other things that could be useful to me. The red dot and the red candle. I'm not going to go into those right now. Just more reason to think that we have an active seller involved here. The problem with this trade is that my expectation is no more than 11,500. Now, it looks like a lot from the top, but this closed at 11,529. So 30 points would be great, right? But to get this trade to work, I need to put my stop above here on a close above it, which could be 11,550. So that's 20 points. So now I have to ask myself, how often do I get the 30 points? Well, to answer that question, you need to know, do I have any reason to expect a reversal, right? Because momentum is what makes that happen. Okay, so what I was getting at before with the waves is we have a third wave here, right? This one we said was a third wave, big wave, compared to the last two. The next wave is divergent. You see how this wave here is smaller than the wave prior to it, but compared this high to this high, and we actually got higher prices. So the way to think about this is price is rising without an increase in volume. I talked about earlier how sometimes this doesn't matter. Other times it does. This is one of the times when it does. When you are following momentum, and momentum is, or the price is continuing with momentum, but volume is not confirming that continuation, we want to be a little bit suspicious. Doesn't mean to immediately short. It means that the next setup, which is here, the star, because this one I guess technically you could have taken, but like I mentioned, I did not like it. It's right back into this. It's releasing this trapped buyer. It's not a great place to trade. After this, the problem here is that you got this move already, and now it's returning with like high velocity. See that, like big. I don't personally take this and this. It's just me. But this one in particular, I'm not going to take. This one's better, but because you do get under it. So I could see someone trading that, and that's fine. The problem is you're not probably going to get any further than 11,500 because of that point of control, and you're trading with momentum. So now that's my primary target. Whoops, I went too far. I really don't expect it to hit though, right? Because of all of this support. That's what I'm really getting at. Is that yes, we had a divergent wave here, but I don't expect it to go anywhere. Now here's the thing. This wave here was not divergent to the previous one. Yes, it's smaller than the third wave. But look, it's bigger than this one. What that means is that the next wave, it could be another third wave, right? It could be really big. So we are no longer looking at an exhausted market. Here we could have had an exhausted market, and if you had a better target, it would have been a just fine short. But when you have momentum this strong, you need a really good target. And here our target was 11,500. So if point of control would have been here, right? If this point of control is where all the volume was here, and we didn't see this big up move somehow, or if this big up move was all on really, really low volume, and we were targeting this. Unfortunately, if you look, this guy was already, this guy, see, they got cleaned up, right? They got repaired. And then they moved it higher, and they repaired it again. I guess it technically didn't touch it. So if you thought you could get 11,484.50, if that's what you believed you could get here, if you ignored this one for some reason, and you were like, this point of control, which again came from back here, if you were like, that point of control, I think it's going to break, I'm going to head for the next one, then it's fine. The problem is that this point of control came from this big move up. Like, right? We said this move here. That move here was dominant. It's important, right? We traded under that point of control. If it was bearish, that's where it goes down. It's not bearish. That's what this tells us. The green candle says they trapped him. The red dot says there's excess there. And the blue dot says there's delta divergence. When it continues with a triangle up at location like this, it's not bearish. It's at the voodoo range level, tested below it and found a buyer. It's that simple. Once that's happened, I don't want to be shorting even on divergent waves like this. Like this. Even there, I don't really want to be shorting because I don't have any expectation, right? Here, I've got a higher wave, not divergent, and momentum strong. It's only a good play if you think you can break support. I don't have any reason to think we can break support. And we don't. Okay, it immediately reverses. Now, here's where I'm starting to get suspicious. What should have happened here, if we have lots of momentum, is we get higher prices. Instead, right, and look at all the volume that got put in here. See this? One, right? It's like really big. Bigger than all of these. Bigger than this big, long wave. And this is cumulative volume. So in this one star bar, more people sold. This was the other reason not to take the trade, honestly. In this one star bar, everybody sold. More people sold here than all the contracts done down here in that second mouse trade. Okay, you might think that's bearish, but the problem is it means they used all their ammo at the top. So for this to be a real sell, every single volume after that has to get bigger. Okay, not every single one, but a lot of them have to get bigger. The other thing we might have seen, if I was looking at this right, is that we trapped a buyer at the top. So not only was this big volume, this was buy volume. So so then it's like, okay, the short is coming. Right? So, but the problem is that all the volume was put in there. You might think it's good, and it is in the long run, but we need continuation. It's good as long as this was a buyer, right? As long as we got it up there, you can see it on the volume profile, right? As long as we can stay under that, it's bearish. To stay under that, we're probably going to need a lot of volume. That's all I'm saying. So at this very moment, am I aggressively shorting? I might, right? I might give it a try. The problem is I've got to put my stop here, and I don't know if I'm going to get 1-to-1. That would be the reason not to take it. It is a valid setup, okay? So we come back at it. I think it can go one more. We come back at it, and we're going right for that trap buyer. Usually, we trade above the trap buyer and give him a chance, a courteous opportunity to exit. That's not why we trade up there, but that generally does happen once. Not always, but often. We will trade to it or above it and test him out. Make sure he really doesn't want to keep buying, right? Because he was a big buyer then. Maybe he's just trying to get long. And when it bounces here, the real reason why is when it bounces like this, they're thinking, oh, maybe that same buyer is adding more because we went lower on him. Let's make sure, let's go ahead and follow him higher, right? And then once they find a seller up here and he doesn't respond, they're like, okay, I'll short. Bears win. But you usually have this one little bounce, even if this isn't the same buyer, just to see if he might buy a little more once you get there, right? So look, we test the buyer and find an immediate seller. See that? So like, this is definitely a sign of weakness, but we haven't gotten above it. It's not technically a setup for me. Triangle up, divergent dot down is not a setup I have evaluated. If I get a triangle down after this, it's an aggressive short. The problem is my target is 11,500. So, and my stop still needs to go up here. So it's a short, but it's like, how much do you really want to risk on being at the top, right? I'm not a great top picker. Because it just doesn't work very often. Okay, notice volume, right? We always want to be watching volume. So we got the big seller here, right? Followed by a low volume candle. That's probably the reason it bounced. And then this divergent dot here was big volume too. It's divergent because a lot of traders traded on the ask. They bought the breakout, right? If it's bearish, what we should see is a triangle down. And then I can technically short it if I had a target far enough away. When we immediately come back at it with speed, and especially when that previous bar was high volume, I am more bullish than bearish. Notice there's a white diamond in here, and that's just telling me that this bar developed fast, and this previous bar had a lot of volume. It's often a sign that that area is going to be important. It's not necessarily an immediate buy, but it's like, watch what happens when price gets back here. Now, if you think about what's happening, we're just bouncing off of this old resistance, new support that I mentioned before. This is also a low volume area here that we haven't gotten to, but we're like anticipating that. Okay, they trade above the trap seller, but they trade above it. Trade above the trap buyer, and they squeeze above them with a pink bar. Okay. So if I would have gotten short here, I'm still not stopped out. I've not gotten that close up here, right? Like an actual close above like 11,550 or so. So when they return with this, I have to watch very closely. I've got another red dot after taking out another. After taking out one, we printed out another red dot. That right there is usually an opportunity for a scalp for me. It just needs to be at location. Are we at location? Well, we got the voodoo range here, and we got a trap trader here. We traded above the trap trader, and we traded below the trap trader. As long as that trap trader is at the edge, we should see some kind of a response. So that right there lets me short this bar. There's also a triangle up. It's hard to see. There's a white triangle up here, which makes this a much stronger short. Doesn't mean it always works. Just that the opportunity for it to be going at least one bar, if not 2 bars lower, is high. And then we have to ask, do I have expectation? Can I get it to go anywhere? Well, we've already tested this, right? So we're going to pull this back. All right. We don't know that this is actually the, this green line is the opening range high. And we don't know that that's there yet. So we're, oh, actually, yes, we do. It's the 15-minute high. So yeah, we do. No, this is only, let me think. I'll have to think about that. I don't think it's there yet, but it might be. So my target now is back to the Globex high, which is the brown. That's Globex high. If I'm shorting here, I want to at least, I would not short unless I thought I could get there. I'm pretty sure I can. So this purple bar gives me further confirmation when there's an arrow on it, and it was preceded by a red. It says red, purple. This should create at least one more. When it doesn't, like this, it needs to immediately reject and go lower. Otherwise, I will exit the trade early. Okay, it does continue to go down. So far, the short is working. Again, I have no way of knowing from the algo how far this is going to go. We do not know if this is going to be a 12-point move or if it's going to be a 120-point move. We don't know. But we got in at 11,535 with the stop at 11,552, let's say. So we want to get at least like 20 points plus. So we got in at, like I said, 35, and now we've gotten 10 to 12 points. So I'm probably taking my first piece off. I generally do this in quarters, unless I'm trading really aggressively against the trend, then I'll take half first and leave a runner. We're kind of trading heavily against the trend here, so that's probably what I would have done. I don't remember exactly how this trade played out or whether or not I caught it or not. But one way or another, I've usually taken some of the risk off. I'm taking a close look at the waves and the volume. Take a look that we had now put in a volume bar here that's got a lot more volume than the previous ones. That's a really, really strong indication that I'm going in the right direction. It's not at the apex, yet people are following it. So what that probably means is we hit some stops. We took out some stops here, which is great. Now we're coming into support, right? It would make sense to take another piece of this if we make another candle here. I don't know if we do. Okay, like that, right? Like you really do. If you see this approach, this old trap buyer, and just like reverse, I try not to panic out of trades. It's a bad habit. It'll cost you money. But what I will do is I'll panic out of quarters, right? Or halves. I'll still leave the runner, but I'll market sell one. If I had a target at this white line, if I had a target at this, can't see shit. If I had a target at this white line, and we get within a tick or two of it, and some big buyer comes in, like, I'm not even waiting for the star, right? The moment I see it come back over the POC here, and back over this structure for sure, at this level, I'm just letting it go. Because look, this is a low volume node. You see that? This is the 10-minute volume profile for any of those who are just joining us. We got into this low volume node, low volume area, and bounced out of it. I don't need to wait around to know that the trend is probably continuing when I see that happen. It comes back to the voodoo range level, and it finds a seller. This seller has low volume. I know that because it's got a red triangle on it, and the previous one was pink. Okay, pink followed by red triangle means that this guy's really low volume. He's also purple. See that? So this becomes a pivot. I don't know if it's going to continue short immediately, but it's going to become a pivot. Note that it came up and it bounced off of this big P profile's point of control. Very bearish, right? Very bearish. On the very, very short term, very bearish. We don't know about the big term, but we had looked at before that we thought this is an area, right, that might find a rejection. Not saying it's the high day, just that our opportunity to fight the trend is the first chance to do that. We got into this range, so I'm going to move this support down to see this high volume node down here. I'm expecting that this low volume node or this high volume node is probably going to get tested. We could go to this. Remember I pointed out before that we didn't quite reach it. That would be a great place to sell. I'm sorry, to exit. Not to sell, to exit. If we thought it was still short, right? Yeah, that's where that's probably as low as I would expect it to go. And then we have this absolute similar situation with the POC down here underneath a pullback. Most likely to get a response here. It'd be a much better place to buy if we do get a response there. Okay, so we got, like I said, here, low volume. We expect it to be a pivot, and it's right off the voodoo range level. If I was already short with that runner or whatever, remember, I'm taking some off here, right? I'm thinking we're not going straight down. It's at least going to chop. Let's take most of my leverage off. Maybe leave one to see what happens. When I see this, I'm like, perfect. Now I know that if we develop volume above this, we're going higher. And if we develop volume below it, we're going lower. Those diamonds are rarely an actual trade. It's just a location. It's to bring my eyes to that location to see who controls that area. The fact that it has a star also does matter. See how this one's a star and this one's a star? That is meaningful. And then I'm also looking at how I'm going to watch the volume. See how this buy volume, it got lower, right? We got that divergent. We got another, I'm sorry, this was not divergent. This one would potentially be divergent, and that would be more bearish if they stop buying here. We don't know if they will or not. Okay, instead they buy some more up to the voodoo range level and through it. Now look, no longer a divergent wave. See that? No longer a divergent wave. We don't really want to be short anymore. The idea that this was the top, it needed it to happen relatively quickly. And so now, even if we break the highs, it's technically not divergent because we haven't broken the highs. It's like hidden divergence, but it wouldn't. But one way or another, even if we break the highs now, it's potentially going to be an impulse move higher. So I don't want to be short here unless I can break below this little pivot here. Okay, that's now the area that I want to be short. So I'm going to take this off and this off. And we're going to say if we can develop volume down here, the potential is there for it to go lower. But if it goes higher than this, I'm just going to get squeezed. Technically, I want a POC above the voodoo range level here to get out. But that triangle up through it is usually enough to tell me we're going to get one more push. But not always. So okay, so now we get above it and we come back below it. We put a POC above it, but it's a bearish bar. So technically that's quite bearish. It's not a trade, it's just looks like they might be trying to fight it, right? And then they do continue. That's interesting. If you look real closely, my rule is the POC needs to be above the voodoo range level on a bullish bar. It did not get there. So while I would have liked to exit the runner, I really shouldn't be here. Not yet. We're still in the pivot. We are still in the pivot. We're also not below it, right? Okay, we're testing below it, but I'm watching the POC. This line here needs to get below it. If we put in another one, it should. And look, they get the they get the POC below, and they print a star, right? So clearly they are testing out this pivot. This is not a setup by itself. But like the top looked bearish, now it's looking bullish. That's what pivots do. It's better just not to trade them until you know which side is actually winning, because there's just no expectancy right here. If I got bear, even if I did think this was a buy, my target's 11,537. Like, why? Why put a stop down here and a target here? That doesn't make sense. I mean, maybe it does for you, but it doesn't for me. So, yeah, we try to push back in. Now we've gotten a POC, that yellow line, got below this pivot. We just double check. Yeah, no, it's these two. Below the pivot, clearly. It's on a purple bar, which is the one caveat. And if it's a purple bar, you need a little bit more. Here, we would like to see a third wave. That would be a really good sign. So let's put in a line here. It would have to get above this bigger wave. Oh, I'm sorry, I'm on the wrong ones. This was a third wave up. That didn't make it to the high. These little 2 bars don't count, so it's this one. It's got to be 3 bars or more. This one's clearly already a third wave down. Now, the interesting thing is we've put in a lot of volume here cumulatively, but we have not yet broken this low. It really does need to break. But it's looking like it's going to. Technically not a trade yet. But I'm realizing at this point that I might not get a setup other than this one, right? I would still have my runner, but my opportunity to add, I know it's going lower. It's possible that this is a repeatable pattern that I just don't know yet. But generally, I do not. I wouldn't add here. So it does get the triangle down, which is always a good opportunity to add if you're trading with momentum, which we are, I would say. And you can know if you're trading with momentum, real easy way, look at the previous triangles. So white triangle, immediately stuffed. Technically an entry, I guess. You could have taken this because of that. That's probably the best entry. Triangle up, gets beat immediately by an algo. That's probably a pretty good entry, actually. This triangle, immediately beat. You'd have to take that too, and that one would have stopped if you took that trade constantly. This white triangle, immediately beat. Technically a short, right? This red triangle went lower. This red triangle went lower. What do I think this red triangle is going to do? Well, usually I would think it goes lower, right? It would make sense that it does. It did make a lower high. I'm sorry, a lower low. And it's met this previously trapped buyer. I had mentioned before that these previously trapped buyers tend to act as support. If they do, we really don't want to be short. But sometimes that support doesn't last very long, so it can be a little bit tricky to tell. Now that's why I take profits along the way. So we do get underneath him, but notice the POC can't seem to get under there. That yellow line can't seem to get under that white line. That's suspicious. Now we finally do, but it's purple. So if I had been if I had been short with more than one contract, at this point, I'm looking to the left, and I'm seeing that we're breaking through all of these supports, and I'm starting to think, okay, we have one right here, right, which is the target. I took it away because I didn't want to be a buyer anymore. So after that pivot. But that's like, if that target hits, that's a pretty good extension, right? So let me take this one bar at a time. So when I see this, I'm thinking, we're getting very close to that, and there's a target over here that was hit. So I'd like to be taking more profits here. If I only had one, I have no choice but to just put my stop lower. So at this point, I'm certainly lowering my stop. I'm no longer going to leave my stop up here at like 52. Unless you really thought this was the high, then I guess you could. But I'm usually going to look and see this last pivot here, this guy, this like little pivot thing. I do not want to see them get back above this pivot. It really should hold. They sometimes test sellers here before returning lower, but usually I don't really even want to see them put a point of control inside it. Because there's a red diamond here, I know that it's very common for the market to come back in here. They tend to act as magnets. Actually, it's the bar before it, technically. But if you see the red diamond, you know that area is probably going to be tested again. So if that concept, the idea, look at all these diamonds, right? Red diamond, red diamond, red diamond. So this red diamond went lower, price got attracted back to it. This red diamond, price went lower, price got attracted back to it. See that? And then rejected. When they're strong resistance, what tends to happen is price tries to approach it but can't put a PLC behind it. So I could probably put my stop somewhere here and be safe, is what all that means. You could probably also say, if I close a bar higher than this red triangle here, I'm likely inside of this pivot. And if the bottom of this pivot gets breached by point of control, most likely they're going to at least get the middle. And if they get the middle, well, now they've gotten back into this, right? So you can start kind of logically thinking, while this is just like playing in your favor, rather than worrying about where it's going. Just manage your risk, right? Like, don't worry about, is it going to go higher or lower? Just manage, like, what would I do if it went higher? Well, I don't really want to be short if it's here. So, okay, so we continue high. We continued lower. We got some absorption at the lows. When this happens at a point of control, this is usually a bounce. Whether or not that bounce goes anywhere, you don't know. So if I have more than one contract here, I'm definitely out of the trade with everything but one contract. Okay, I test the pivot from below. This was expected, so you don't really want to change any plans 166 when you get something that's expected. But here I have closed behind this red triangle, right? So if I wanted to, I could say I'm out here with my runner, and that makes sense. Here we've gotten a point of control back inside the pivot, and we've clearly closed above the diamond. So usually I am covering my runner there. I don't want to see increasing volume in there. I really don't. But sometimes that's gonna get you, right? Sometimes if you're gonna move your stop, you might miss out on a leg. It could happen. Sometimes you'll get a chance to get back in. In this case, that is not a short, but that is. So that you could take, and it would work, right? So if you decided that you want to move your stop to like the middle of the range, like I said, usually if you move your stop here, price is going to go at least to the middle. So it makes a lot of sense to take profit here at the edge. It does go to the middle and it reverts. Once you get POC back under it on the triangle right there, they're like confirming that they're bearish even though there's no volume. So purple means like there's barely any volume here, yet buyers can't do anything. Note, like I mentioned before, these diamonds tend to get traded back behind, right? Once that happens and you get aggression, like a triangle, back below it, it's a short. Like this one was. Remember, this went above it, came back with a triangle, that triangle becomes a short. Even doesn't mean it's not going to get tested, but it's usually going to go lower. Now notice the momentum's going lower, and we've also made a third wave. That third wave made a new low from the previous two waves. Actually, that might not be true. This was the previous wave, so that's interesting. Yeah, so this low here becomes really important. The 11.468.25. That becomes very important because now that is like fair value is somewhere in between there and here, and we don't know where until we price discover a little bit more. So that's here, right? So if we are going lower than the open, this area needs to have sellers in it, and so it doesn't mean we're going to go straight there, but that's where we should sort of assume that the market wants to return to test for buyers. So let's see, we got here, right? Got a diversion bar, that's kind of nice. So now see how this closed above the POC of the divergent bar? If I'm short, I really don't want to be in this trade anymore. That is an immediate exit for me, generally. Unless it's really, really bearish. That is a sign. In particular, when we had action like this, see how this was the low and it was absorbed by buyers? And we traded under it on low volume, the pink, and came back on speed, that's blue. Like all of those things it's just like this, right? The difference is it's low volume. So this isn't an absolute low. It's on super low volume. And so when you get underneath a previous low and you find nothing underneath, yet they can't sell it, it's clearly going higher for the time being. Not necessarily on the candlestick chart, but on this chart. Where's my target? 11,537, obviously. But that's not obvious. It should be. Okay, so we come back to it. Cool. Back in the bull trend, right? This is just your classic double bottom, right? The second low is a little bit lower than the first one. Got absorption, followed by low volume and speed. Triangle up confirms. So even if you didn't get long here, yeah, you should here. I should. But you definitely can't be short. So we do trade above 11,537 again. Note the previous high was here. We came right to it, got another rejection. This one technically is not a setup like the other one was. Here we've got a third wave up. See that? One, two, third wave up is biggest. That's a problem for me. I don't like taking trades right after the third wave unless the previous wave was bigger. The down wave was bigger. In this case, the buy wave is the dominant wave. So that tells me buyers are in control here. So this next pullback is probably going to be about a 50% pullback. And then I want to be a buyer normally. So normally it'd be like this. And I'd expect a pullback to here. The problem is on the higher time frame. On the higher time frame, we knew to expect sellers here. Right? So on the shorter time frame, I'm thinking, well, I want to buy a pullback. On the longer time frame, I'm thinking this is where I expect sellers to be sitting. So what that means is it's like that disagreement is going to make me wait for a better setup on the higher time frame. I'm going to expect some kind of a bounce here at the 50. And I could take it back to here, but I should expect some kind of big selling going on up here somewhere eventually. So we try to pull back. Let's just go a little faster here. They right away pull it up. I would not have caught that. It's like a 38.2% retrace. I would not have caught that. There's no short there. Okay, so they push higher than 37. Cool. Not a big deal. And they come back with a good setup as long as it's followed by a triangle. So this is a high odds short. And the target is back down here. Okay, it gets me my risk off, but it does not breach the voodoo range level. That 11,537 is extremely important for sellers to break. And they can't seem to do it. They're putting in aggressive buyers here fast. Speed bar star with trapped sellers. Like it's a problem for sellers for sure. Okay, so oftentimes when you get this pink bar following a green bar, you get at least one more bar. So you could technically, I don't necessarily have a buy here, I don't think, but here, maybe I do, but I don't think so. And then here, I definitely do have a buy for a scalp. It just doesn't, you can see it doesn't quite make a new high. So this high is here. This one does not quite make a new high, and it puts in trapped buyers early on. No, we don't have any, on this chart, we don't have any trapped buyers at the top, but there are trapped buyers in this bar. It's just not at the very top, right? So technically that is potentially a lower high, and it's shortable. It's just, it usually chops. So I usually avoid these like that. See, it's just going to get choppy. That too is a short, but it's above my 11,537 level. It's hard not to take these because you're taking it under, but I really want it to swing up here to get me better risk reward. Because I just don't like having my stop here when it can just chop in here. So I usually just don't take these. And I do miss some pretty good moves. Right? So that's nothing technically. So now we've gotten underneath the voodoo range level. And we're putting in one of these high volume bars followed by speed bar. Again, I don't usually just short these outright, but it is triangle up first. So if you were really bearish, it is a setup. It's just, it's inside of that little pivot here that I said I really don't want to be participating in. So I'm probably missing that too. I just expect choppy markets here. Yeah, that looks pretty bearish. Yeah. So again, this one is better. And the reason, sorry, this is actually better than I thought. I didn't see this. The POC, even though it's a lower high, the POC is outside of the pivot. See that? So once you get the follow through on the triangle and your POC is clearly outside of the pivot on a down bar, I think it might be okay to sell this and put a stop above the Voodoo range level. It's probably okay. Because think about it. You got this, these diamonds generally get a trade back into them. It trades back into it. It can't breach it and it goes lower. So having this be a lower high might actually be good. I'll have to take a look at that. Because that might be a pretty good sell that I missed. Okay, so this is usually a buy for a scalp because these rotations are nice and large and you get absorption with the diamond. That's one of the times when this can generally just kind of come back, unless it's really bearish. And by the way, the orange bar following it is usually pretty bearish. Like this, orange bar following green bar. Orange bar in the same range as green bar. Usually pretty bearish. Yeah, and so it does get behind it. Note they tried to save it and it failed. Okay, now here we've breached the low and we've gotten to this target. And I said this might be a good place to buy. If we get a follow-through triangle up, I could target the Voodoo range again. Okay, so here. So this is an okay buy, and I'm pretty sure I took it. I don't remember if it worked. I kind of think it didn't. Pretty sure that's fine. Yeah, the problem with this at 937, the problem with this would be 1037, is at 1037 here. So it's basically here. Once you've gotten this, response, test, response, and we close underneath the Voodoo range level, I probably should just stop buying. Because I knew to suspect shorts here. Sellers were identified pre-market for anybody who just is hopping in. We identified 11,537 as a likely area of resistance. And then we identified this as a buy zone once this happened. When it bounces off the 3-day POC and it can't reach it, we come back to 11,537. Where it tricks you when you're day trading, right? This is a little nugget, right? What really gets most of us when we're day trading is we identify early on that I want to short 11,537, and we do one of two things wrong. We either immediately sell it. Let me take off some of these trades. We either immediately sell it the first time they test it, right here, and expect a full retrace of the entire day, and then get stopped, right? Like sometimes we do that. Otherwise, we try once or twice, and it keeps coming back at us, even though we've got signs of momentum here. Like this was a successful trade, but it took a couple tries if you're just selling on location. It took a couple tries to get it. And then the mistake I tend to make is once we've retaken the level, I'm thinking, okay, I'm bullish now. But the truth is that in the higher time frame, which matters more, getting above this and closing below it is not bullish. So while it does test above it, we can't be bullish unless it develops volume above it, which is what I said earlier. So it looks like they develop volume here, but it's so brief. And so I need to remember that this move here is not enough. Like 1 star to the downside, this is not enough buying to be excited about. If you look here, we did get this and this come off it, so they did try to save it, right? And my thinking at the time here, let me just take off these trap buyers here, just so you can really see. My thinking at the time was, now that we've seen this, we should be buying dips, right? But the problem is we know on this higher time frame that we're probably going to come back and attack this. It's really likely. We've already talked about why. Really likely. So when we can't See, what I'm used to seeing is volume, volume, volume above the voodoo range. Test it, bounce, make higher highs, right? We get this. So even though this is just lower highs, and like I said, generally this is not always a high odds entry down here at lower highs. I think even though it's above the voodoo range level, and my first thought was be conservative here and here because we didn't necessarily have divergent waves since we weren't making higher highs. And I thought, okay, this is consolidation. It is consolidation. The problem is it's consolidation at the high. And that high point is where sellers are waiting to see some sign of aggression. So when buyers try, but we get under them, like you might not know here, I think this is still a little bit risky because you don't know if you can really get through this pivot, even though it did go through above it, which usually gets rid of it, honestly. Once you've held the pivot, see this? Hold the pivot, trade below the pivot, test the pivot, try to go lower and can't. That's what made me bullish for the same reason as the candlestick chart on the higher time frame. I thought for sure we're going to go higher, and we did. But I need to remember that bigger picture, the chances that this gets tested are high. Look at the volume. It's low, right? I mentioned it. Low volume bounce. So the thing about the low volume bounce is in the short term, it does create a bounce. But it's going to act like a huge like it's going to have a target on it, right? For any seller to hit if they get some momentum. And my trouble was I didn't want to commit to anything to the sell side until I got underneath 11,537. But when we got the sell signal was actually slightly above it because of this action. So this lower volume, higher low or whatever, this little save here created this volume here, this little build. And that, as a result, when sellers showed up, they were higher than the voodoo range level. And once they got under the voodoo range level, they really didn't attack the way I expected. Instead, they waited, right? They let them try. So this, while it's normally not an immediate sell, I should evaluate whether or not failing to get back above it here might be like a high odds sell. Because I know that usually you do. And it's at a very important level. And it was followed by a purple bar. So this pullback should be really easy if it's bullish. And when I get a sell signal here, it's the same sell signal here, right? Orange bar, yellow dot, triangle down. Orange bar, yellow dot, triangle down. The only difference is this one had momentum established, and this one momentum established earlier. So this one, the algo is saying, if it's arrow, if I get arrow down, algo is saying, if it's bearish, short it, sell it, right? It's telling me to sell. I didn't because it's purple, and usually get a retrace. But when that retrace fails, I need to remember that the algo's not going to remind me that we're bearish. It just did. It's not going to remind me that we've got momentum. It just never took this out. It never took that swing out. So this arrow still applies as long as this high doesn't get taken out. That's what I need to remember. So notice we trade right through the low volume area and then bounce back to it. See that? So this setup, green bar, orange bar, and triangle up, orange bar, becomes so much more powerful, I believe, when you're retesting, reoffer, rebid. Yeah, look at that. Just can't get through it. So let's see. Does it continue? My guess is it might. Yeah. So it's interesting though how long it takes. So it gets underneath this trap buyer from before that was acting as support, right? Support, you'd expect it to be resistance. They come back into the low volume area. You get triangle up, orange bar down, red arrow down on a purple bar. Again, just like this one. My expectation is we bounce there, and we do. We get a green bar in both cases. Usually, the very next push is good to go. The hard part is here. We got the star. and they stutter stepped. They gave us a buy signal here. And so I need to know that even though I'm getting a buy signal in what looks like a pretty good location at the bottom of the chart, with a day that had open drive higher, that because I am facing higher time frame sellers up here, this needs to be sold. It's tricky. And so if you miss this one, they gave you yet another chance with the orange bar. Another chance. This one wasn't triangle up orange bar, but it's still orange bar in the range. And then arrow, or I'm sorry, triangle on a red candles like this. Oh, I missed this one. This is a really strong sell. It usually gets retraced, and when it doesn't, it's a strong sell even more so. So this level should get retraced. That's a buy to get back to it. Yep. This gets retraced. So this buy is good. Star, triangle up, especially with the divergent dot. But look, we get back to this. Once again, that trapped buyer gets stuck. So, okay. So that's interesting. I'm going almost at 2 hours here. We haven't even gotten to the Fed meeting. I think I need to back it up a little bit. So that's what that, or speed it up a little bit, I mean. So that was the first one. I said sell there, and you'll get a response. Okay, so we got 2 opportunities, right? The other one was at, let's see, this is 12:30 Eastern, which is 11:30. So this continues to chop. Okay, so we're not going to fuck with it until it goes higher than the Voodoo range level. And then 11:30. This is it. So we're coming. Let's do this one. Like I said, I don't care if anyone watches. I'm doing this for myself. So watch, come, go, whatever. All right. So we have a big chop zone. Right. We knew that was coming because of that low volume area. When they trade above it, they fail to go higher, and then they try to trade below it, and they go higher. And they trade above it, they go lower. Tried to trade it below it. See how this range is contracting? That's what I'm trying to say. It's an area that we thought would become resistance. It becomes resistance. We get a buy at location on the Voodoo range level, right? This was just so everyone's following along here. This was a short here. This was a buy. There was an algo signal here to scalp higher. And I did it. Okay, that's the buy. It comes back up. What we need to remember is that once these pivots are used repeatedly, over and over again like that, they become fair value, and it's very, very, very easy to trade through them. So these, even though it looks like you're trading into resistance, as long as range is expanding and not contracting like this, right? As long as range is expanding, when you get that range expansion down, expect it to sweep all the way through at least once, maybe twice, and come all the way back down. So this one here, blue dot, star, triangle up, this location's perfect. This one, blue dot, star, triangle up, is a little bit sketchy. You're already through that fair pricing zone and entering unfair pricing. So location matters here. The algo does not know where it's firing. It's just firing based on conditions. It says conditions were met for star dot here. Conditions are met for triangle here. And I know that when that happens at location, it's a good long. Well, here, the same 2 bars printed. This one's pink, but it's still the star dot and triangle, but location is completely different. I'm now at resistance, established resistance, over and over and over again. We're testing above it on low volume, which is what that tells me. So my first thought when I traded this was that this is a short, and I took it and got stung. So the moral of this story is that I had the right idea. I knew that this zone here could be retraced easily, right, in both directions. And so my thinking was retrace it here and then come all the way back down, because I thought it was bearish still from up here, right? My thinking was bearish. I thought this bounce was short term. That's basically it. And so I didn't take this long, and I took this short, right? I found this location sellable. I thought it was unfair pricing to the high side. It was too rich, and I wanted to take price back to this 3-day range level, I thought this one was more likely to be hit than this one. That's really as simple as it gets. And now I can't just sell, right, because I think it's bearish. I need to wait for a trigger. My trigger is the algo, and the algo has to have a pattern, not just a bar with a color on it. It has to be a pattern. Now this pattern, triangle up, orange bar down, only works when there's expanding or momentum, expanding range or momentum. The problem here is that while this was definitely contracted range, see how it still sort of works, but it comes back at you a lot, right? Like it still worked. Triangle up, red bar down. It does work. It never stops you out up here, but you need to be certain or strong. You have to have strong feelings that this is the resistance. Well, I had strong feelings that this was resistance, and I think that there's unfair pricing up here, right? But I don't. I have this old trap buyer that we've traded above and below and above and below. I personally think I should probably get rid of that resistance at this point. He's already been traded through. It's fair pricing now. Well, I don't want to be shorting in fair pricing. I want to be shorting in unfair pricing, which is probably up here. So let's mark this and see if we can instead find a better short up there. The other problem with this is green bar, pink bar, I have found, usually produces extensions. Maybe not huge extensions, but at least another bar, even when one comes down. So the very next bar, we go up, and that makes sense. The 100th thing you can notice is that we're starting to see blue dots here. Blue dots is the 3-day POC. Generally, I don't want to be trading at the previous POC. It's usually fair value. A lot of the algo setups will not work very well. Most setups in general to scalp will not work at the POC unless you're approaching it from a gap. In this case, we're not. So we do get an extension off that green bar, pink bar. 2 bars is average. That's all you need. Okay, now take a look at this. Same setup. Triangle up, orange bar down. No pink bar, no green bar right behind it. And we're getting at least close to this unfair pricing. I'd technically put it here. It didn't quite hit it, but it got damn close. So now I have to say, can I short this? Well, we have clearly a dominant and third wave over here. That could be a problem. That is suggesting momentum is up. We are going higher. So I have to think this is the tippy, tippy, tippy top. And I have to have good reason to think that, to take that trade. So it's probably an okay scalp, but it's at the point of control of the last 3 days. It's in the middle between my clear support and my target, which is here or here. The risk reward's just not that great, right? And it's not at perfect location. So it's better than this one, but I still don't know if I can take it unless I'm sure that we're expanding in range. Let's see if it works. It does give you a couple bars, which makes sense. It got really close to that, right? That might be the top. We get just a star. It's a green bar that traded underneath this green bar. If this is support, this rockets higher. I think support's down here personally, so I did not take this. But generally, if that's support, that rockets. Okay. Note also, we want to take a look at the diamond bars and see if we put in a POC on a non-pink bar that's bullish above it. This is the high. There are no yellow dashes up here. It's not bullish. Sorry, that was here. It's not necessarily bullish. It's still balanced, and this is unfair pricing up here. So this triangle up, arrow down is much better than I first thought, as long as we haven't gotten a POC above this high because of this diamond. So that makes that much better, and it makes this long much worse. So when that green bar gets stuffed by another one, notice the green bar has high volume. That's what the red triangle's telling me. It's saying all your volume's here, and we're stuffing it, closing below the POC, right? The problem is we're still at POC of the last 3 days, higher time frame POC. And we didn't quite get into this resistance. So you're right in the middle of the chop range, right? Like, do you really want to enter there? Only if you thought it was really bearish. It doesn't look bullish, but I don't think it's all that bearish, personally, yet. So, okay, we go a little lower. Not surprised that we get a little bit of an extension, but not much. Now, this volume, this white diamond says that this one has less volume than this one. We're facing a red triangle up. I would not usually buy this. It does go higher. So, like I said, it doesn't mean it's wrong. I just don't have a reason to buy into a triangle until I've broken above it. So maybe I could buy this one, but usually I'm not. Don't have a reason to yet. Maybe there's an unknown reason to, but I don't necessarily see it. Now notice we put in barely any volume here after a third wave up. Oh, there is one reason to buy it. 50% back. Oh yeah, I missed this. Okay, once you put in a third wave in, a pretty consistent trade is to wait for the 50% back or the 62% back and take a sign of aggression. It fails here. I knew why, right? It had a lot of resistance up here. I wouldn't have taken that. When it goes lower and it comes back at the 50, see that 50 line? And we get a sign of aggression here. Speed bar, that's also absorption, or the triangle. That's an okay scalp. It's not brilliant, but it works a lot for like 2 or 3 bars. Okay, now we just have an orange bar, but it's got a red dot. And that red dot means they put an excess at the top. So someone up here bought at the highs, basically. We can look and see if they got trapped at the highs. Whoops, sorry. And the closest person that got trapped, the delta chart is here. That might be the top, right? But usually, after trapping them, we trade above it, then we trade below it, then test it, and then go. So when we get, where was I? That. When we get this and we go back to that guy and we reject, we still have not gotten point of control above it. I'm not ready to short yet. Okay. Kind of the same thing, just more chop, right? Where did I want to get? Okay, so up here. I don't have to evaluate every single move. We get above the trap buyer and we go into resistance, right? This is kind of what I expected would happen. We get a range expansion. This is what we want. This is what's tradable, right? This is not so tradable. Like, you can do it, but it's a lot of work. Once we get range expansion and we get into the resistance zone and we get a reversal sign, now I can start to think about shorting. Technically that's not a short by itself. I don't have a triangle before it or a dot before it, so I'm not necessarily doing anything. The purple and pink ones do tend to extend at least 1 or 2, but I don't know. I don't have enough evidence of that yet. Okay, we get a big buyer off of that trapped buyer. See how they're trying to turn this into support? I'm definitely nervous about buying this, and that's usually a sell, but I'd like to see it come back and try to break over it one more time. If they could, please. There. Okay, that's what I want to see. They put in the red dot, the red diamond. They got a red red triangle on a purple candle. When the purple candles come after red bars, I don't have any in view right here, but when they're red outlines, they can continue on fast. When they're not red outlines, it usually needs to retrace at least a little. Okay, this did break below here, so technically, once again, if we get a triangle up on the next bar, it's a buy signal, but it's a horrible location, right? You're right into resistance. So generally, what I'm looking for instead now is a sell. So that, like I said, this is generally a buy if momentum is higher and you think momentum is up and you think you're going higher. I just don't think we're going higher. So I like that trade setup, just not in this location. So what I want to see is I want to see that trade stop out and get stuffed because I didn't take it. And if I'm right, it should, right? Nope, instead it works. So now they've established support. Interesting, right? They're trying to say we're buying this resistance and no one can stop us, right? Notice they got up here with a pink bar and immediately rejected above the voodoo range level. That's suspicious. This star bar was unable to put in a POC above the voodoo range level. That's suspicious. What's probably going to happen is we're going to return into this chop zone and then we're going to figure out who's in control. So I'm not doing anything here. This is technically a buy. It's just a horrible location. I've seen it work, right? Just like this. I've seen this work. If you want to be aggressive and scalp those every time they come, do it. Like, you're going to get 10 points a lot. You're just not going to get 50 points very often. So as long as you know to get out, maybe take it with like big size and just get out right away. I don't think it's a horrible strategy. It's just not something I'm doing right now in the account I'm using. So here you get another one of those purple bars that are also orange, and also have the red diamond. So usually this gets some kind of a pushback. It's typically not the very top. Okay, and that green bar usually means we're continuing higher once again. So when that gets stuffed, now I'm paying attention. Like I said, if this one gets stuffed, because I said it usually goes higher if it's bullish. If this one gets stuffed, because it usually gets higher when it's bullish, or if this one gets stuffed. That's what I'm waiting for. I'm not taking all those longs because I'm not bullish. Because on the higher time frame, I'm just not bullish enough to buy here. But I do know that if those get stuffed, I have an opportunity to look for a short. The first two did nothing. It cost me nothing to wait. The third one got stuffed. So we absorbed sellers. They went higher and found aggressive sellers, trapping some buyers. If we look here, we had buyers trapped here. When they're this high up at the ticks from the top, like of the high day, oops, sorry, I went too far. Usually, it can reverse right away, and it might never get traded above. If it's anywhere else, it usually trades above it eventually. But when it's not, it does not always trade above. So this is an immediate short. And not surprisingly, it takes out the voodoo range level right away. Because, again, we had range expansion, right? Range expansion. This is what I was trying to get at with this. We got range contraction. This little trap where they pull down and make it lower and then rip right through it to go higher. See that? Lower low, higher high. You have to pay attention to those. That is a sign that range is expanding. Another way, third wave, right? Usually happens in expanding markets with expanding range. Third wave. Notice this is another third wave, right? I mentioned I can't take that right off the bat. We're clearly expanding. I guess in this case I could. So this is, yeah, no, I didn't mention it. Another third wave. And we come right after the third wave. What I meant by I can't take it. I can't take it here. Because at this point, I don't know that this is yellow, that this is gray. I don't know. You don't know for sure until it's had 2 bars. So I'm personally not trading that short because I need another bar. But now I know. When this one closes bearish, 2 of the last 3, I know that this brave has been printed and I can fight it aggressively as long as I have a setup, right? Look how close we got into the 90. This dotted line, anything below it is 90% of volume in the last 3 days. So only 10% of the volume has been done up here. But also note that 3 times VWAP is above that. When this orange solid line is above the orange dotted line and it's pointing straight up like this, it's really hard. You need a lot of energy to continue that trade higher. Because, yeah, I'll just leave it at that. Do your own research. Okay, so we get a nice short. It goes through the voodoo range level. And like I said, range expansion should be expected here, and there's really no I did take profits in this, right? This is a sign of continuation. As soon as I saw the point of control not continuing lower, I'm taking profits here. Not a lot, but like a third. That way, my stop is like much smaller financially. When it hits, it's a lot less of a sting. And so I can confidently and comfortably ride the rest. Once I see these dots come in, I know that we have to get over them, over their point of control, like here or here, to really go higher. So I could even add there, but I'm certainly not going to exit. And so you see this comes all the way back down to VWAP and then absorbs a little bit. See how point of control is shifted up and now it's shifted down? That's meaningful. That's a sign that this big wave is humongous, right? So this here is a dominant wave. It's a perfect example of a dominant wave. Look where the big volume was in it, right? See how it jumps all of a sudden right here, the cumulative volume? It's this one. So we take this and we expect high volume areas should be tested, right? High volume areas should be tested. Again, remember, we started this trade back here, right? I said we should be short if this area is defended. And then I said if this Voodoo range is defended, we should be long. Well, we got that, but we got both, right? We got this short was hard. This long was easy. This short was easy, in my opinion, if you had the algo. Okay, so yeah, when we come back to VWAP, which is 11,487, keep in mind we've now traveled almost all the way to the Voodoo range, but not quite. With this kind of momentum, I expect at least one Voodoo range move. That's normal. Again, I explained it in my other video on targeting with the Voodoo range. Note where we started. This is one of the reasons why I had those 50% lines. If you draw the 50% line, what you'll see is that this is almost exactly between the two. So I can target here. I'm not going to draw carefully, but look. If you do this, see how it's like almost exactly on the line? That's what I wanted to show you guys. That's normal. And so when that happens, I want to target at least here, the midpoint, 11,500. If not, the Voodoo range level below it for a VR and a half. The other thing I can look at is where volume is and where there's anomalies. So here's a low volume node, right at 11,468. Very reasonable spot to target. And then there is previous day's value area high, 11,407, another 100 points down, right? There are a lot of targets I could use. Usually I just stick with the Voodoo range. One way or another, I have not hit my primary target here yet. So I'm not flipping bullish here. Even though you might want to, it's not bullish. So he came back to that other trade, trap buyer, and reversed off of it. Tried to anyway. Oh, do they bounce a little higher? I just don't remember. Let me just, this is going a little bit further than I'm comfortable with. So I must have done something in here. So this is not technically a buy. Okay, so like I said, these usually get some retracement. Usually. It doesn't. And so what I may need to do is when I get this followed by yet another one that does not retrace, any retracement I should probably be exiting on. Like that. I should probably just exit. Because this usually gets an immediate retrace. I don't know if that's consistent enough, but that's something I might want to look at. Note I mentioned that we should eventually expect price to come back to this high volume node. Right? This. Which it did. So if you, what I should have said here, if you're not comfortable holding, like I'm comfortable holding as long as it doesn't go up here. But if you're not comfortable holding, if it goes up to here, then get out here. Right? I already took my profit. It was early, but I took profit in here, I think twice. So once here, and then somewhere down here. I don't remember where, if it was this one or maybe PLC, I don't remember. But it doesn't matter. Well, the idea is take profits along the way, hold runners as long as you can. If you don't think you can hold runners here, then don't do it. Don't hold it. So it comes back to here, which, like I said, is very normal. And so what I'm kind of wondering is when you get one of these, and you get a slight pullback and then an immediate extension, and especially if you get a second one, if that happens again, that's why I wanted to rewind for a second. I'm wondering if that right there, like this is clearly something's up, and that's probably an exit your shorts sign. This might actually be a buy signal when it's that second one. And see, the thing is, the hard part is what we should expect is a 50% retrace. And then if sellers are in control, there's usually a sell opportunity presented there. And we're really close to that. So the idea of buying this is kind of effed up, right? It's like if you want to be a buyer, you should have been a buyer down here. But I didn't get the setup I wanted. So I think the answer is you just don't get to buy it. If you don't want to aggressively buy this or this, I think the answer is you just don't get to buy it. And when it comes back to the 51 to 62, you instead look for the short that you planned on taking, which I would have planned on taking. And I think I did. I actually ended up adding back in this case. So, okay, so I shorted here, exited some here, exited some, maybe on one of these purple bars. I just don't remember, guys. And then when it came back up, I just had one left. And so when it's set up here in the area that I expected, right, 50 to 100%, 50 to 62%, with a pretty strong signal. Again, the only problem with trading this is I had to wait for oh, did I not get a triangle? Thought I got a triangle down here, because that's usually how I enter these ads. Oh, there, sorry, there it is. I thought it was the first one, it's the second one. I knew it was an orange bar triangle. Okay, so this one did not continue. It just didn't set up just the way I wanted. But look, red diamond gets a pullback that can't get behind it. So this orange bar becomes a very strong sell. So I could add like 2 there. And then when you get the triangle on the red, see how this is a red bar? You guys, I'm doubling when I see that. Literally doubling. Because it really often like cascades before it comes back. It does usually mean that this is the last push for a bit when the triangle's on the red one, but it's an immediate extension. So okay, so this is where I exited. So again, I had 3, 2, 1. Let's say here, 1. Held it. Right, held the 1. Let it come back on me. More than halfway. Didn't see anything here that I liked. But once it pulled back and gave me another orange bar, back to 3. And then here I was up 6. Right? So once I'm up 6, I just want 10 points and I'm back to 3. So this is just a scalp. I don't know how far these go, but the average is about 2 bars. So once I get this second bar red, I mean, any sign of any buying, like that one little tick, I'm out. I don't want to, no heat after 2 bars. 0 heat with this, because it's usually going to come back. I just don't know if it's going to be 2 or 3 or 4. So if I get 2, which is like average in my experience, I'm just exiting that ad, and I'm getting like 10 points on 3 contracts extra, right? And my risk there is that it can't come back above this. It can come back at it, but it shouldn't close up here behind it. It should be pretty immediate. So then when I see this yellow dot divergent bar on a purple bar, when this bar with the star closes above the POC of this bar, which is down here at this, there, see where the dash is? When this close is above that, all out. Because it's a buy signal. It's a legit buy signal. And in fact, I might have even reversed, but I don't think I did. This was a pretty big trade. And usually when I take big trades, I step away because I get like emotionally charged and I make bad decisions. I give it back. And I don't like doing that. So anyway, that is a good buy. So I got to wrap this up. It's getting a little long, but hopefully you guys found something useful out of it. I know we didn't get through the actual Fed decision. I honestly suggest that people don't trade Fed itself, but take a look. I just want to show you something interesting. Remember, we had said that the level here, we should expect that it gets retested, right? Because it happened on low volume. Well, look, it literally never did. They got it all the way down here, near 11.357. So let's just move this forward. So we get nice trading here, right? 11.357 was it? 11.3. Yeah, like 11.400. It comes down to, goes all the way up, goes all the way down to here later, during the Fed. Goes all the way down, right there. Okay, so see how there's a voodoo range level there? And then we also had 11.357 down here. This here was the low of the Globex low. Never met. Like this low was put on a low volume. It's probably going to get beat, right? And they've put in a buy signal here. Dot, star, triangle up. Like really, really consistent. And look, rotations are wide, right? Like, I have to take that. I have to. And while I want to take profits into this, I should be holding as long as I can. I wish I held longer, but I must take these. There's another one. They do this a lot at the edges. See this one? Dot, triangle up. All right. Keeps going. So I mean that right there was an excellent opportunity if you were really going to trade during Fed. Then the hard part is how do I know not to sell this, right? 11,537 and 11,605, which, like I said, I don't have a whole lot of time to talk about this, but let's just swing back here real quick and show you. So this one was a fine sell. There's nothing wrong. It might just not have set up right here. Yeah, it didn't quite reach it, but this is dot triangle down. So that's the sell there underneath 11,537. I think that's perfectly perfect. Perfectly perfect. And then it came up at the end of the day. Right here. It does it again. You don't really get a great setup there. Not perfect anyway. This is okay. Pink bar, red bar, and then red triangle. That's an okay setup. Then right here. So 11,605. So this is where you get, it's bullish, right? Really bullish. We already identified that when this doesn't get taken out, and we know it should be easy to take out, you can't be bearish anymore. And so while it's very, very tempting to take these, and I took one of them against my better judgment, I took one of them. They just don't work that well. This one did at location, right? Orange bar, triangle down. Divergent bar helped there. But when they keep attacking it, like, I mean, thankfully I had no setup there. But look, it came up here, and it's set up. So this one was a third wave. I can't fight the third wave directly. This is why, because you get this a lot. But once that third wave is put in, I can take this, as long as point of control is below. It didn't have a pink bar, and that should have warned me right there. That was not a great setup. It just wasn't perfect. And then it didn't set up there at all. Yeah, that one's not ideal. This is not in the right place, right? Dot star with the triangle, but it's not at the edge, so I'm not taking it. This one's better. Dot triangle at the voodoo range level when it's clearly bullish. That one worked. And look how many times, I mean, it did it there. It did it here. You could literally take any white triangle or white arrow up, like, and you'd get stopped like once. Right? Now, once you get stopped, you have to settle down, right? Because now you got to think about the fact that, like, well, look, if this, see, triangle up, orange bar, we never got a close above this. See that? Almost, but not quite. So when that happens, and you're above a voodoo range level, and it works, like this is a sell, and it would have worked nicely. I did not take that. I wish I would have. But now I want to avoid taking these longs until I see something change, like sideways. Now I can take star triangle up. But this is better. See, dot triangle down, better. Here it just didn't set up. On the 24. That's a scalp because of the location. This one looks good. Dot triangle up. But this is better. Dot triangle down. Because it's bearish, right? That one's just not in great location, but it's okay. Dot, no triangle. Oh, the dot's going their own direction. Or, yeah, that's not perfect. This one, dot triangle down at a voodoo range level, boom. Dot triangle down back to the voodoo range level, and then dot triangle up at voodoo range level. Happened twice. 2 opportunities to get long there. Like, you could literally have like 2 setups and find them over and over and over again, right? So anyway, yeah, that's how you know not to short. But look, you can short this. Like, if your locations, right? Like, if you're only working at these locations, like, if you just say, I only want to take a trade if the bar touches a voodoo range level, well, you get long there then. Maybe long here, but better is here after this one's got this retrace, right? And then you don't short this. You missed that, but you get this one. right? And then you just have to be willing to hold freaking runners, which is hard. But yeah, once it starts trending up again, you need to relax on the shorts. Only take them when they set up perfectly at location. I didn't even add that. Oh yeah, no, this one was at a midpoint, not perfect. Not perfect. That one's, you're extended a lot, but it technically did set up. This one, it's that same thing where the purple bar with the red diamond and orange extends it immediately. So I'm gonna have to investigate that. And now we are here. So you can see that we got all the way back to 11,605. Right? The voodoo range level. And then it traded higher over, it gapped up. So are we probably going to come back and retest this and rebuild and stuff like that? Yeah, but not right now. Right now, they just want to see how high they can get. They're going to try to defend these levels like this, but when they don't happen in the voodoo range, you guys do not take it, right? I'm thinking about buying this like any pullback, basically. It's just going to keep going up.